You're listening to Ron Siegel's Home and Finance Radio Show. Now live in studio, your host, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion, delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family or business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We have a very focused show. We only chat about items that affect the roof over your head, your bank, and anything I feel would benefit you. And let me remind you, if you ever have any home or finance-related questions, I am the consumer advocate looking out for you, and you can reach out to me directly, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are no operators standing by. I am it.
Quiet, numbskulls, I'm broadcasting.
While I do have a great team when it comes to developing a financing plan or plan to save you money, I personally work with you. Even if you don't have any needs today, save this number in your phone for future reference, 800-306-1990, 800-306-1990. And as we do every day on Ron Siegel Radio, we like to celebrate. So today, let's take a look and see what our celebrations of the day. We always have several. Sometimes they are exciting celebrations. Sometimes they leave a little bit to be desired. I don't create them, I do report them. So today, we got some good ones here. Today, National Play-Doh Day. Okay, that one, I don't know if I'm going to consider that one a good one, or we might just have to go to our friends over here and come up with a simple line that...
It is what it is.
Yeah, it is what it is. So, Play-Doh Day, National Working Parents Day, okay. Mayflower Day, okay. Now we get into the good stuff. How about National Cinnamon Raisin Bread Day? Cover that with a little bit of butter. It might sound a little enticing to me. And we've also got my favorite. This one here, I like it, and my buddy Mitchell, he's going to really like this one. I'm going to give you a drum roll before we get to this one, though, because this one is going to be one that's big time for Mitchell. National Guacamole Day. So if Mitchell is watching, Mitchell is listening, yeah, he'll be excited to hear about National Guacamole Day. Let's take a look at the markets today. We're looking the Dow Jones Industrial Average. That one is up 213 points. S&P 500 up 1424. The NASDAQ is down just a couple of points. Not even points, it's less than 1 point. Negative 0.21. Oil up $1.58 per barrel. Why is oil up $1.58 a barrel? Well, that has everything to do with the Gulf of Mexico. So whenever you see some of these things going on, the tornadoes, hurricanes, whatever comes through there in the Gulf of Mexico, that does have a negative effect on oil because we've got the production out there, we've got the refineries out there. So it does have a negative impact on the price of oil, but we're looking at the national average of a gallon of gasoline. That one dropped about 0.4 cents on the national level yesterday, 0.4 cents down. Venezuela, we are still at $3.23.1 cents, 323.1, just a couple ticks below what they're paying in Hawaii. Still one of the few states in the union, I think it's only two, that are paying over $3 a gallon. Continuing with our under two states, that would be Texas, Oklahoma, Kansas. Look at that whole corridor right there. Missouri, Arkansas, Louisiana. Not going to get too much gas there. Mississippi, Alabama, Tennessee, Kentucky, and South Carolina, all under $2 a gallon. But hey, we can keep on voting the same way we're voting and keep on getting the same thing we're getting, and we can still keep more and more excuses. I saw a couple of interesting questions on the social media channels, especially in light of hearing what our former vice president has been saying about climate change. Have you noticed all the wildfires in California and Oregon? Have you noticed those? How is it that the climate change only affects California and Oregon? No fires in other areas, but we've got the fires here. Is there something that I might be missing there that is causing that to happen? How come is it that these fires all seem to be so close to our roads? Is where they start. It's climate change. When you have a reveal party with pyrotronics lighting tinder, is that climate change? Do we have a monopoly on stupidity in California and Oregon? Is that because where this is all coming from? So I don't answer that, because there might be some, especially if you're going up to our area in Sacramento. There might be a monopoly on stupidity there. Unbelievable. So take a look at what else is going on in the world today. Did you watch that? Did you hear Dick Butkus's comments about the NFL and standing? Yeah, he was pretty adamant about that. I thought that was fascinating. Was Butkus one of the famous Chicago Bears? Basically says, you know something? Go to another country. If you're so unhappy here, why not go to a country that's better? That seems to me like a very, very logical response. If you are so unhappy, find a better country, go to that better country. I think it wasn't Butkus, it was Ditka, Mike Ditka's comments. And I think that's a great thought process right there. I mean, I would hate to see America's free. You don't have to stay here. So the thought would be, if you're so unhappy, why do you stay? There's an open door. There's plenty of other countries that'll be happy to have you there, I'm sure. So it was a very fascinating story. Again, Mike Ditka tells NFL players to get the hell out of the country after the protests. I just thought it was great. And here, let me give you the exact quote. Football's football. It's not a complicated thing. You're playing the game. You're enjoying the game. You don't like the game, get out of it. It's not for protesting one way or the other, what color you are, what you think, this or that. You play football. That's it. You're privileged. You got a gift from God that you can play the game because you got a body you can do it with. I don't really understand what you're protesting. I played the game. I coached the game for a long time. It makes no sense. He continues. I would tell those players, go to another country and play football there. You don't have to come out. You don't have to come out if you go to another country. You can't, because the game's only played in this country, and if you can't respect this country, get the hell out, unquote. Fascinating comments from one of the NFL greats. I agree with him. I don't see how you can disagree with something like that. Again, every one of these players that are feeling so oppressed, they are totally free to go wherever they want, play the game wherever they want or can, and earn a living wherever they feel that they are not being oppressed. Moving right along. I got a question, another thought. Every once in a while, some of these thoughts come across my mind. Seeing right now that we're looking at $1 billion plus in riot damage, really, really hitting the insurance industry in Minneapolis following the George Floyd riots. The question that I have, though, because, the insurance companies are saying $1 billion so far. That's from peaceful protests. If you have $1 billion in damage from peaceful protests, what would happen if they weren't peaceful? Can somebody help me with that? Can you post that on one of our social channels and just let me know what happens if these protests are not peaceful? Moving right along, let's see what else we've got. I think we probably have to get off to our discussions of the day. There's a lot going on today, so we may have to just get over to the discussion topics for the day. We're looking at a lot in the world of real estate today, and we're looking at credit. We're going to talk later in the broadcast, not this afternoon, later in the broadcast about questions about collections and FICO scores. In fact, we've lined up a FICO score expert is going to be here in a few weeks to come and chat with us more significantly. But today we're going to talk about some common questions about collections and FICO scores, things to consider before co-signing a loan. The surging real estate market continues to climb, and obviously we're going to have our mortgage minute, all that and more. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Connect with us, facebook.com/Ron Siegel Radio, on Twitter @Ron Siegel. And if you miss any part of our broadcast, shame on you, but the replay is available at Ron Siegel 1 on YouTube. Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Did you know that banks and credit bureaus are rewarded financially if you have bad credit? And the worse your credit score is, the more money they can make off of you? How does that make you feel, knowing that banks are getting rich off of your hard-earned money? How does it make you feel, knowing that if a bank or a credit bureau makes a mistake on your credit report, they benefit from it and it hurts you? The Fair Credit Report Act of 1971 requires banks and credit bureaus to report only accurate information, and nearly 100% of all credit reports are inaccurate. If you're sick and tired of being broke and tired of being robbed by the banks, you owe it to yourself and to your family to call Rondi. Rondi is a FICO certified credit professional and has helped thousands of people just like you get out of debt and establish great credit. Rondi's number is 855-608-1990. Again, that's 855-608-1990. Or visit creditsanitizer.com. Again, that website is creditsanitizer.com.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rates subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and PRE number 018694552.
Are you a veteran, police officer, firefighter, doctor, nurse, or teacher? If so, you qualify as one of Ron Siegel's VIP heroes, and we have rewards up to $5,000 or $10,000 when you buy, sell, or refinance a home with one of the Ron Siegel radio partners. As one of the heroes, real estate agents will rebate part of their commission, lending partners will give a credit at closing, the title company has special published rates, and many other service providers have incentives too. All you need to do is call Ron Siegel Radio at 1-800-306-1990. That's 1-800-306-1990. Or visit VIPHeroProgram.com. Just think about what you would do with all the rebates and incentives from the partners of Ron Siegel Radio. Just call us at 800-306-1990 so we can show you our appreciation for your service.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Mortgage Minute today being brought to you by our friends at Gold Star Mortgage. When you're ready for that next mortgage, Gold Star. They've got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990. Dow Jones now up 205 points. NASDAQ down 18 points. S&P 500 up 16 points. We've got the 10-year Treasury down 1 basis point, which means it's about 1/100% on the interest rate or the yield. And the mortgage-backed securities are down 3 basis points. Doesn't mean a whole heck of a lot. Those are pretty flat for the day, so it's not going to have a whole lot of effect on what's going on. But the reason that you listen to Ron Siegel Radio is because you are looking to find out the information of what is going on. So we constantly tell you that information each morning about this time. Well, we've got the Fed concludes their two-day meeting today. We'll get their Fed statement about 11 o'clock Eastern time, followed by a press conference by Fed Chairman Jerome Powell. That's about 11:30 California time. Fed's comments on inflation will be the focus. We hope to get clarity on their 2% average inflation question, methodology, and when that clock starts and how high they'll let inflation go. Peter Bookvar shared some interesting comments from past Fed members, and I quote, "The congressional mandate, as stated in the Federal Reserve Act of 1977, is for the Fed to provide for quote-unquote stable prices, not 2% annual price increases. A 2% inflation will double the price level every 35 years. The late Paul Volcker said that, quote, stability at 2% is an oxymoron, unquote. And he was also fond of saying, quote, once it's inflation out of the bottle, there's no way to put it back in. He learned that from experience, unquote. He finished by saying the Fed should heed the wisdom of monetary policy giants like Paul Volcker and Milton Friedman and provide for stable prices in its policy decision and not target an average inflation rate of 2%, which will result in an ever-increasing price level. These are some interesting points. Why is the Fed fixated on 2% inflation? It would result in ever-increasing prices that would double every 35 years. So we're going to have that information for you. We'll report on that tomorrow. So we'll get to that. Earlier this morning, Mortgage Bankers Association released their mortgage application data for the week, showing that overall application volume was down 2.5% from the previous week. Purchases were down 1%, and on a year-over-year basis are only 6% higher. Smallest year-over-year gain since May. Just last week, purchases were up 40%. Refinances increased by 4% last week and are now 30% year-over-year. While this is still strong, the year-over-year comparisons are shrinking. Earlier this year, refinances were up over 100% on a year-over-year basis. That just goes to tell you that we did start seeing this refinance phenomenon starting at the end of last year. So it's going to get lower and lower. Interest rates unchanged on the Mortgage Bankers Association, 3.07, which is 3/4 of a point lower than this time last year. Remember, the MBA rate is for last week and always includes a fraction of points. So in this case, they did about a third of a point was in their cost of doing a loan. In researching the report, we found that the media said that no major move in rates. Unbelievable. It's Diana Olick at it again, just basically trying to give bad information. I don't know why she wants to always give out bad information. So basically, she's saying that there's no major move in rates. There was no incentive to refinance. Just as I'm coming on air today, I had a email from somebody who said, Ron, what should we be doing? Because I sent over a copy of our mortgage statement. Not going to give you any specifics on who it was, but their interest rate is at 4.125. Now, 4.125, I don't know all the specifics of their situation, but at 4.125 on a sizable loan, do you know how much money you're going to save on that loan by going and refinancing, restructuring that loan? What's that going to do for your family? Just think about that. I don't know why people want to get, and especially from characters like Diana Olick. I don't know what her deal is, why she comes up with some of the commentary that she does. But coming out and saying that there's no benefit to refinancing, really? You tell me. I mean, if you're looking at being able to save a couple $100s a month, does that mean anything to your family? I mean, to me, I do fairly well, but I don't know. I still have the desire to save money. I still have the desire to, work for my family, not somebody else's family, or the bank. Think about that. I mean, just when you come out and you say something along those lines, what you're basically saying, maybe it's just that she gets paid too much money from the bankers, and that's why she's coming out and saying there's no incentive to act, right? If you can save 0.75% on an interest rate, but you don't have there's no incentive there. Think about that. If you go from a 4.125 going down to, say, even at 3.5, which you could probably do better than 3.5, that's $300 a month in savings. You tell me, is $300 a month meaningful to you? I look, $3,600 a year. I can go on a nice vacation for that. $300 a month might be a car payment, might be some good money to save for your child's education, maybe for college, maybe your grandchildren's college. $300 a month. You tell me, would that move the needle for you and your family? I just throw that out there because you have to really be careful of what you're hearing from some of the people in the media right now. They're not your friend. Why they're not your friend, I don't know. But I just look at it and I say, what is the motivation? Now, maybe the motivation is that, she likes to help the banks. Who profits if you do not refinance? Well, yeah, you're right. The answer to that question is the banks are the ones that profit because they're charging. If you think about this, when we follow the interest rates, when we follow what's the leading indicator for mortgage rates, I've told you this many, many times. Mortgage rates are geared off of what's called mortgage-backed securities. Okay, what are mortgage-backed securities? What do those follow? Well, those follow the 10-year treasury for the most part. Why? Because we keep our loans about 5.25 years in this country. That's what we do. We keep the loans about 5.25 years. If we're keeping the loans 5.25 years, but we have a desire in this country for having 30-year fixed rate loans. And I get it because people want that stability. So if you're looking at that and you say, okay, we've got a 30-year, we're going to keep that for 30, but the banks, they don't care. They're not looking for that stability. The banks are just worried about the idea of what do we have to do to cover our ratios and make money. So what they end up doing is they do their hedging based on the 10-year treasury, not the 30-year notes, the 30-year bills, right? So what they're doing it off of a 10-year. Well, if you look at the spread between the 10-year and the interest rates, there's good money in there. And if you keep that and don't refinance that, think about how much better off the banks are doing just because of your bad guidance from people like Diana Olick giving you some seriously bad information. And it just drives me crazy because I hear so many people that do follow that guidance. So don't do that. Think on your own. Get a mortgage checkup. I've told you many, many times at our team, if you ask us to ever do this for you, it's totally free. We'll tell you also you can get the information from the digest, SLT Home Digest, SLT Home Digest. Text that to 79564. You'll be able to get on a monthly basis what your property value is. It'll give you an idea of what your savings might be just by doing a little bit of restructuring. So I want you to have good information. I do this radio program, and some people ask me, Ron, why do you do this? And the answer is I don't make money at doing a radio program. They don't pay me to sit here and talk to you each morning. What ends up happening is I like to get the good information out there. Obviously, I have to feed my family. So what ends up happening, the next step to this is we have a few people that will end up calling us and want to get on with our private client division, and they want to earn or learn about their properties. But the idea here in my world, I want to do every possible loan that we can. But if I don't do the loan, it doesn't really matter. Right? The bottom line is I've spent my morning, my focus is getting you the best information you can so your family can make the best possible decisions. You're listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. When we come back, we'll talk about those 7 items that we wanted to get into with regard to your credit and your FICO score, questions about collections. Surging real estate market continues to climb, all that and more. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Connect with us, facebook.com/Ron Siegel Radio, on Twitter @Ron Siegel. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Siegel Lending Team offers you buying power. Let's say you can afford a monthly mortgage payment, including principal and interest, of around $1,900. With today's rate on a 30-year fixed mortgage of 3.75%, APR 3.85%, that payment could support a $416,000 mortgage. But if you wait and rates tick up to around 6.5%, which is roughly the average home mortgage rate over the past 30 years, that same $1,900 mortgage payment, including principal and interest, may only be able to support a $314,000 mortgage. That's over $100,000 worth of home you're missing out on by waiting. That's buying power. All you need to do to get started is reach out to the Siegel Lending Team at 800-306-1990. That's 800-306-1990. Or visit SiegelLendingTeam.com. That's SIEGEL LendingTeam.com. Payment example excludes taxes and insurance. Call us for full details. 800-306-1990. That's 800-306-1990 or SiegelLendingTeam.com. Equal housing lender. Licensed under NMLS number 217037.
Are you purchasing or own a luxury home? If you're like so many others, your home is your largest asset and the mortgage is your largest debt. The Siegel Lending Team has some amazing financing opportunities right now. Jumbo loans up to $2 million, 30-year rates below 4%, 15-year rates near 3.5%, and if you can believe it, 7-year interest-only hybrids in low 3s. The Siegel Lending Team has all the options for your jumbo or second home loan requirements. Take advantage of them while you can. To learn more about all the other financing products available from the Siegel Lending Team, call 1-800-306-1990. That's 1-800-306-1990. Or visit SiegelLendingTeam.com. That's SIEGEL LendingTeam.com. Again, call 1-800-306-1990. Rates subject to change without notice. Licensed by NMLS ID 217037 and 145502. Equal housing lender.
Homeowners that are 62 and older are about to find out a great way to live a better retirement. It's called a reverse mortgage, and SLT can help you learn more. Call the Siegel Lending Team at 800-306-1990 right now to receive your free booklet with no obligation. It answers questions like how a reverse mortgage works, how much you qualify for, the ways to receive your money, and more. When you call the experts at Siegel Lending Team today, you'll learn the benefits of a government-insured reverse mortgage, how it will eliminate your monthly mortgage payments, and give you tax-free cash from the equity in your home. Here's the best part. You still own your home. Now is the best time to take control of your retirement. Call 800-306-1990. That's 800-306-1990 to get your free brochure. Call today or visit our website at SiegelLendingTeam.com. That's SIEGEL LendingTeam.com. Or simply call 800-306-1990.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. And yeah, the real-time real estate segment today being brought to you by the area trusted real estate professionals of Ron Siegel Radio. Text SLT Home Digest, SLT Home Digest to 79564. Find your dream home before someone else does. I was starting to tell you about that a little bit in the last segment about the digest, SLT Home Digest. That tells you everything the county recorder knows about your property, everything the market believes about your property. And it's all free from your friends here at Ron Siegel Radio. All you got to do is put your information in there. Nobody's got to know where you live, otherwise we can't give you that information. The surging real estate market continues to climb. Earlier this year, Realtor.com announced the release of the Housing Recovery Index, a weekly guide showing how the pandemic has impacted the residential real estate market. The index leverages a weighted average of 4 key components of the housing industry by tracking each of the following: housing demand, growth in online search activity, home price, the growth in asking prices, housing supply, growth of new listings, and number 4, pace of sales, the difference in time on market. The index compares the current status to the January 2020 market trend as a baseline for pre-COVID market growth. The overall index is set to 100 in this baseline period. The higher a market's index value, the higher its recovery, and vice versa. The graph we've got showing right now on the screen, if you're watching us on RonSiegelRadio.tv, or if you're watching us on AM 1490, the video feed from ABC News and Talk, KMET 1490, or on any of our YouTube channels or socials, you're going to see a graph that shows the index by how the real estate market started out strong in early 2020, then dropped dramatically at the beginning of March when the pandemic paused the economy. It also shows the strength of the recovery since the beginning of May. And you can see that the index stands at its highest point all year, including the time prior to the economic shutdown. The momentum is still building is the issue right here. Though there are, and let me see if I can get that other chart on the screen for you. Though there is some evidence that the overall economic recovery may be slowing, the housing market is still gaining momentum. Zillow tracks the number of homes that are put into contract on a weekly basis. Their latest report confirms that buyer demand is continuing to dramatically outpace the same time last year, and the percent increase over last year is growing. And obviously you can see that on the chart. If you haven't seen the charts, we do have it on our socials every day. Clearly, the housing market is not only outperforming the grim forecasts from earlier this year, but it is also eclipsing the actual success of last year. Frank Martell, president and CEO of CoreLogic, explains it best, quote, "On an aggregated level, the housing economy remains rock solid despite the shock and awe of the pandemic. Bottom line, whether you're considering buying or selling, staying on top of the real estate market over the coming months will be essential to your success." That's the real-time real estate segment, again brought to you by the area trusted real estate professionals of Ron Siegel Radio. Text SLT Home Digest, SLT Home Digest to 79564. Find that dream home before someone else does. Again, the digest is free. All you have to do is go fill in your information where you go to that link that I already gave to you, get the information, and it'll come to you on a monthly basis. I'm a big believer that how do you make educated decisions on a regular basis when you just haven't had the education, when you're working out of blindness? Just a thought for you. Common questions about collections and FICO scores. If you have a collection on your credit report, you may be wondering how it may impact your FICO scores. So we're going to share answers to the most commonly asked questions about collections. As with any derogatory information, its impact on FICO score will gradually lessen over time as it ages off the credit report. So first off, what is a collection? If you become significantly delinquent on a credit obligation, such as a credit card or medical debt, the lender or company owed will often consider it a loss and sell it to a collection agency who will then try to collect on the money owed. Lenders send many credit card accounts to a collection agency after 180 days of non-payment. Either the original creditor or the collection agency may report the account in collections to a credit bureau. The account will be marked on your credit report with a collection status. So what is a third-party collection? Third-party collections are collection efforts made by a collection agency outside of the original credit company. First-party or internal collections is when the lender or company uses its employees to collect unpaid debts on their own. Number 3, how do FICO scores consider third-party collections? So FICO scores consider third-party collection information has evolved. It can differ by the version of FICO. So some companies use various versions. With versions older than FICO score 8, any third-party collection reported will be considered negative within the score. With FICO score 8, FICO score 9, and FICO score 10, logic is added to ignore small dollar third-party collections, those with an amount less than $100. With FICO score 9, FICO score 10, additional logic is added to ignore any third-party collections that are paid in full. While unpaid medical collections with a balance are still considered negative, they have less impact in FICO 9 and FICO 10 as compared with previous versions. First-party collections still treated as derogatory and are not afforded these special treatments. Number 4, will paying off balances owed on my third-party collection increase my FICO score? From a FICO score perspective, the impacts on the score will vary depending on other information in your credit report. The information on the collection and the FICO score version you are reviewing. With FICO score 8 and older versions, paying off a collection would not have a positive impact on the score. With FICO score 9 and FICO score 10, paid third-party collections are not considered negative by the score, and as such, paying off third-party collection balances could help that FICO score. Just some information there for you. Number 5, does the balance reported on a collection impact your credit utilization calculations within the FICO score? So balances on third-party collections do not impact credit utilization characteristics within a FICO score. Balances reported on first-party collections may be considered in credit utilization characteristics. Number 6, does a FICO score consider whether the third-party collection balance is paid in full versus being settled for an amount lower than the initial amount? Quote-unquote settled third-party collections reported with a zero balance will be treated as paid and are not considered negative in FICO score 9 and FICO score 10. Number 7, how long does a collection stay on the credit report? Third-party collection accounts stay on the credit report for 7 years from the original delinquency date of the original debt or the date of the first missed payment, after which the account was no longer brought current. You may see both the collection account and the account with the original creditor on the credit report. There's just a bit of information for you about those collections. Just remember, when you have that collection, here's a common issue that you need to be careful of is don't go paying off that collection so quick. You need to be sure that you're watching the collections and pay them off properly. And what I mean by that is if you're not paying off that collection 100%, you do have to make sure that you're not, number one, hurting yourself. If it's a large collection, you make a $1 payment, you're restarting the clock on the statute of limitations. As I understand it, I am not giving legal advice, but I believe you restart the statute of limitations on that collection. So be careful of making a payment, even like I say, a minimal payment. Once your collection starts getting old or if you've paid it off, I would suggest going and asking the collection company to consider removing it. And probably the best way of doing that is through the dispute process on the bureaus. Because if they don't confirm or reaffirm that debt, the bureaus are going to take that off of your report. Now, don't go lying and saying it's not yours or something along those lines. But what if you put in there, something, I don't know whether this is mine or not. Please send me full details so I can consider paying this off. Well, if they don't respond to it, you're free and clear if it's past the statute of limitations, whatever that is for your state, your area. If they don't respond, it's gonna come off your report because everything that's on your report must be complete, accurate, and verifiable. So if they don't verify it, well, that's their choice. And remember this, nothing on your report must be there. That's another big issue. People don't think about that all the time. There's no law that says that a company must report to the credit bureaus. But there is a law that says that your report must be complete, accurate, and verifiable. If it's not complete, if it's not accurate, and it's not verifiable, then they have to, by law, remove the item from your report. So they put down a partial account number. Well, that's not complete. So that item theoretically should be removed from your report, or they can put the full amount. And you get these crazy things where for the ignorant, and it's just for those that don't know, there's no way you know what you don't know. But for the ignorant, what ends up happening is the bureaus will go in there and they'll say, well, we don't put it on the credit report for security reasons. Well, what does that mean? Does that mean you're letting anybody who wants to look at credit reports? Well, the answer to that is supposed to be no. And anybody that does look at the credit report must have your authorization. Your authorization is generally going to consist of your name, your social security number, and or your birth date. So they've got all that information. What are they protecting? Well, they're just protecting their own ignorance and the fact that they didn't get all the information that they're supposed to have by law. They're not reporting everything they're supposed to be reporting by law. And if that's the case, well, guess what? That's their problem. That's not yours. They've got to follow the law. And if they don't, well, they've got some problem. As our friend Lucille Ball would say, you got some splaining to do. So that is just a little bit of information for you, give you some education on what we've got going on right here. And as always, we tell you, we'll be right back. We're going to have some more great information for you. I know I've got several other reports for you. Good news for refinancing. You got to move fast. What credit score do you need to buy a house? And we'll see if we can find a featured home for you. All that and more. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Connect with us, facebook.com/Ron Siegel Radio, on Twitter @Ron Siegel. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Are you living in the home of your dreams or simply where you think you can afford? Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Most businesses struggle to get the online reviews they need to get a competitive edge over their competition. Rex is a brand new technology that uses text messages to direct happy clients to your online review sites, Zillow, Google, Facebook, and Yelp, and unhappy clients to a private survey, so businesses can win more customers. Try Rex today by going to www.meetrex.com.
Are you currently renting a home? Do you like paying someone else's mortgage payment? Why not explore the options to purchase your own home? Can you imagine a 30-year fixed-rate loan below 4.25% APR? This means with $10,500, you can purchase a $295,000 home and have a principal and interest payment of about $1,400 per month. What are you paying in rent? Does your family deserve the opportunity to take advantage of the current market? To learn more about these exciting opportunities, the Siegel Lending Team is standing by to speak with you. Call now, 1-800-306-1990. That's 1-800-306-1990. Or visit SiegelLendingTeam.com. That's SIEGEL LendingTeam.com. Or 1-800-306-1990. Rate subject to change without notice. Licensed by NMLS ID 217037 and 145502. Equal housing lender. Not endorsed or sponsored by any government agency.
You have a goal of mortgage-free home ownership? What if your home was valued at $500,000? Are you aware that a free and clear home could be costing you $2,500 every month, $30,000 per year? The mortgage planners at the Siegel Lending Team would like to show you how you can own your home, generate tax-free income, and accumulate family wealth. You simply need to call the Ron Siegel Team at 1-800-306-1990. That is 1-800-306-1990. By sending the team a copy of your most recent mortgage statement, the team will send you a no-obligation real estate plan. You be the judge if this is right for your family. Again, all you have to do is send the team a copy of your mortgage statement by email to REAP@RonSiegelRadio.com or call today. Ron Siegel, 1-800-306-1990. That is 1-800-306-1990.
Exchange and without risk. Licensed by the California DOC and BRENMLS 217037 and 145502 and Cal BRE 01869452 and 1866775.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions, as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The featured home segment today being brought to you by MySoCalLender.com. MySoCalLender.com. They've got some great information there for you. Check them out. I highly recommend the site. We're always putting up good information. You always find out exactly what the market has to say about properties that you might be looking for. Featured home brought to you today by Sandy Rodriguez, 12360 Macon Drive, Rancho Cucamonga. 4 bedrooms, 2 full and 1 half bath, $30,000. Well, that's how much it's been reduced, by over $30,000. It's a relocation sale, and they're ready for escrow. One of the most desired streets in the area, the home you have been waiting for, located within prestigious Rancho Etiwanda Estates, an exclusive gated community in the northernmost part of Rancho Cucamonga. Fabulous pool-sized lot, open floor plan, ready for your personal touch. Seller has added 10.4 kilowatts. $45,000 solar system, which will be paid for at closing. The system is designed to power a Tesla and the home with Wi-Fi interface. Interesting. It's $848,000. It's got a $139 homeowners association. Check out those payments on there from our friends at Gold Star Mortgage. So you've got about a $4,672 payment with 10% down, $4,066. With 20% down, 15-year payment is $5,402. You're looking at APRs of 3.338, 3.175, and 2.594, and MLS 217037. So get all that fancy stuff in there for you. But take a look at that property again. It is the featured home from the agent on that is Sandy Rodriguez. If you want more information, give us a call at 800-306-1990. We'd be happy to put you in touch with Sandy so she can get you everything you needed to know. Again, the featured home segment is brought to you by mysocallender.com. Let's take a look and see what else we've got going on today. I had some reports that I wanted to share with you, and we'll talk a little bit about those right now. Is it a good time for refinancing? Interest rates, they're record levels, very, very low. Many homeowners have refinanced their mortgage, thereby reducing their monthly payment amount and potentially saving tens of thousands of dollars in interest fees over the life of the loan. However, earlier this month, Fannie Mae and Freddie Mac reported that they would implement a new 0.5% mortgage refinancing fee on conforming loans. That's going to start December 1st. On the surface, 0.5% seems like a small number. However, it can add a noticeable increase in the cost to refinance. For example, it equates to an extra $1,500 fee on a $300,000 loan. There is good news if you've been thinking about refinancing, but you have to take action quick. On August 25th, they updated information about the new fee. The new 0.5% mortgage refinance fee will not be implemented until December 1st. Those with refinancing loans below $125,000, you're exempt. You need to move fast if you want to avoid this fee, given that completing the refinancing process and getting approved can take some time, especially right now. There's a lot of activity going on in the marketplace, so it might take a little bit of time. You want to be prepared before starting the application process. Access your credit reports to make sure information is reported accurately. If you find errors, follow the dispute procedures. It's a good idea to check out your FICO scores. Make sure you're accessing the following versions that are used within mortgage loan refinancing evaluation. FICO 5 is for Equifax. FICO 4 is for TransUnion. FICO 2 is for Experian. Do not procrastinate. You don't get to choose which FICO you're gonna use. That's gonna come out on your lender's data right on that when they run the report for you. But I do highly, highly recommend that you get registered, go and get an account with myfico.com. Myfico.com. So the thought right there is if you go with myfico.com, it's a service from the Fair Isaac Corporation. So they actually have the best data because it is the company itself. So again, that's just my personal opinion. Do I use it? Yes. Do I get paid by them? No. So I pay them to get the report and the data on my wife and myself, and I just find it to be invaluable. Now, the question you may be asking yourself is, what score do you need to buy a house? Interest rates to buy a home are historic lows, so this could be a great time. but you got to know the scores. It's important to understand how a better score could potentially save you lots of money on interest payments. So before we get into how much you could save based on your FICO score, let's take a look at the different types of loans and the minimum score they require. Now, some of these guidelines will change, and some of them you might call two different companies and they give you different answers. It's not that one of them is lying to you or they're not stupid. They know the scores, but their company may have overlays. There may be some sort of an overlay. So a conventional mortgage is a loan that is eligible to be purchased, guaranteed, or securitized by Fannie Mae or Freddie Mac, which makes these loans more affordable to borrowers. This type of loan falls into two categories, conforming and non-conforming. A conforming loan is one in which the amount falls within the maximum limits of two government agencies that back most mortgages. Loans that don't fall within these limits are non-conforming and are considered jumbo loans. Jumbo loan minimum FICO score required, again, it's most lenders, not everyone, is 680. A jumbo loan is financing that exceeds the limits by the Federal Housing Finance Agency. This means they're not eligible to be purchased, guaranteed, or securitized by Fannie Mae or Freddie Mac. Those are the two agencies referred to earlier. Therefore, this is a non-conforming loan. The reason I don't give you the amount is each county has a different number. So LA County, Orange County are the same. San Diego's a little lower. Riverside is lower. San Bernardino is lower. So you need to understand what your county lending limits are. An FHA loan, the minimum FICO score required is 500 with 10% down or 580 with 3.5% down. Again, there may be overlays from various companies. An FHA loan is for borrowers with limited down payment ability and whose credit history is higher risk. An FHA loan requires two mortgage insurance premiums. One is paid up front. The other is paid annually for the life of the loan if you put down less than 10%. VA loan, minimum FICO score required, none. But most lenders require a 620. A VA or Veteran Affairs loan is 0% down mortgage issued by private lenders and partially backed or guaranteed by the Department of Veteran Affairs. Eligible borrowers can use this type of loan to purchase a property as their primary residence, or they can refinance an existing mortgage. Some people might think having a higher credit score won't make a big difference when it comes to interest rates. Nothing could be further from the truth. Lenders generally take into account FICO score ranges 620 plus, 660 plus, 700 plus, and having a higher score means saving money. A lending tree study showed that borrowers with a fair score, 580 to 669, pay significantly more in interest than those with a very good. That would be the range of 740 up. For an average loan amount of $253,000, again, these are national numbers, but you can do the math for your neighborhood. The average mortgage borrower with very good credit score paid about $219,000 in interest over time, while the fair score borrowers paid $261,000. If the borrower had waited until a score increased by 71 points, they would have saved $41,000 in interest. $41,000. Obviously, that is substantial. The study concluded that borrowers who have debt across credit cards, personal loans, car loans, student loans, mortgages could save more than $56,000 by moving their credit score range from fair to very good. That's $316 a month. So before deciding to purchase a home, check your FICO score and consider whether you might be on the cusp of getting a better interest rate. Again, use the myfico.com, and get the information that you need to understand your FICO score and make that educated decision. Again, you can't make an educated decision if you're not educated. And I had one of our private clients just the other day. If they could get 1 point added to their score, it was going to save them about $400 a month. 1 point. So things like that do matter. We want you to make sure that you're paying attention to that. Now, we were able to get them the 1 point. We understand the FICO model, the scoring model. So we're able to take care of that and show them how to make that happen. But if you're doing this somewhere and they're not looking at these things, it can be very expensive for you and your family. Once again, as always, I ask you set that first radio preset button to come back here every day to join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. A big thanks to John and Sean who are engineering us today. And of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or meet any of our guests, call me anytime. 800-306-1990. 800-306-1990 or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.